your time, man.
Oh man. Hey, we are live. We are live. Good morning, South Florida. Hello, world. I'm Robert Henderson Jr., certified financial planner, certified tax coach. I'm the president, founder, CEO of the Henderson Financial Group. And here live with me are my partners, my peers, my group, my posse, my teamsters, my team members. Got my one and only Mr. James T. All the way from Lake Worth, and I got my sister-in-law, also Linda B. Harris, and I got my partner here. My sidekick here is none other than Tavares. How you doing, Mr. Tavares Jones? How y'all doing?
I'm good. How y'all doing?
Good. I tell you, boy, Linda does never miss a beat. Oh Lord, okay. Hey, we got. Yeah, well, I gotta get it back. Always surprised. That's what I love about you, boy. All my life, I know you just never full of surprises. Okay. All right. So we got a fantastic show. We got a full house today, and we brought on Mr. Tavares. Tavares is my right hand person here. I'm right here with him. He's like right here, like step with me every day. And we want to talk today about mortgages. That's one of the topics we're going to talk about. One main topic is about mortgages because the real estate industry is tripping. Some people are looking for houses, can't qualify for houses. There's a shortage in houses. People trying to qualify for mortgages. These mortgages now, buying $500,000, $600,000, $700,000 homes. You need 20% down, but there's other ways. You got to have good credit. It's a lot that goes on with buying a home. And we're going to also talk about this new reverse mortgage that Tavares has really been helping a lot of people understand that pros and cons and really save some people. I would say almost save their lives.
Most there. And their finances.
And their finance. We're going to talk about that also. But first, we want to say, Mr. James T., what you been up to, brother?
Hey, man, it's all good. It's all good. Mr. Henderson, it's always good to be here, with your lovely sister-in-law. Yeah. She's looking gorgeous this morning. And of course, I got to give some props to Mr. Tavares. I've called him within the past few days, thanking him, so that people can know that we don't just promote people or what they do, but we also work with people on the staff of the Henderson Financial Group who are qualified, competent, and caring. And most of all, caring, because most of the time, Rob, we know that people really stay where they are because they're afraid to take risk. Mm-hmm. But if you take educated risk, if you get people who are competent, who are about service, and who are about caring for you, it doesn't become risk as much as it becomes responsibility for us to continue to grow. We can't stop growing. If you stop growing, I believe you stop living. So I reach out to Tavares, I reach out to Linda, I reach out to Robert, and I want people to know that because, first of all, I trust them, and I know that we've had years of working together, and that doesn't mean that because there's so many things I don't know. So I may bug them and say, hey, before I make this move now, I need your expertise. And Mr. Tavares, over the past few weeks, I've been calling them saying, hey, I got this email. What does that mean? Is that cool? Because I know people out there are scamming and scheming. As soon as they know that you're trying to do work in a business or work on a project, there are other people who will be notified through the social media that we're dealing with that knows what you're seeking. And all of a sudden, you could get an email or a text that does not come from the people that you're supposed to be working with. So I thank them for the security of some of the moves that I've been making in the past few weeks. So Mr. Tavares, hey man, big ups to you for what you do.
Yeah, man, algorithms or something else, aren't they, Miss Harris?
Oh, ooh.
So Linda, what you been up to? Linda, since we last saw you looking bright-eyed and bushy-tailed? What's going on in your world? Give us some good news.
A lot going on. I got a couple move-ins today. I got to go to the building. House I'm renovating. Your cousins want to get paid as soon as they nail a nail in. So I got to run and make sure they did what they're supposed to do and pay them. And just a lot going on. I understand why you don't want to be a landlord, because I tell you, man, some days it gets to be hard. So I got a
Yes.
full day today. Why are you guys frozen? I wonder if I should go out and come back in. Everybody is frozen since the beginning of the show.
No, but
Can you
we've been
guys
seeing
see
you.
It's
anything?
moving.
Yeah, you're great.
Yeah,
You guys are
we all
frozen.
none,
Yeah.
none of us have been frozen, and you're not frozen since we started. Maybe where you are, I don't know. It might be raining. You know, first of all, I want to say, you know, let's say a prayer for we're praying for the people that got hit and lost their lives with that storm, and praying for, you know, people to get back, because we know a lot of damage is taking place. And I just thought about that when you said it was your where you are, your laptop is frozen, but ours is not frozen. I can only say that has to do something with the weather. You know what I mean? It depends on where you are, and
I may have to
internet
go out and
wires.
come back in, but go ahead and continue.
Yeah, can you hear us? Can you hear us?
I can hear you perfect. I see myself moving, but you guys are like,
No, over here we see everything. We don't see no nothing. So just ignore that. As long as you can hear us, that's what's important. You know?
All right.
Yes. But people was calling all over, calling me saying, "Rob, are you okay?" And I reminded them that we're in the southeast part of Florida. You know, down in Miami area, the south part, and a lot of that took place in the Gulf and the north part of Florida. But hey, you know, so far I've called people up there. I got a house up in Tallahassee, and the landlord said everything was good. You know, not a single was missed. So praise God for that.
Absolutely.
But yeah, it's like James said, you know, it's you know, it's a risk, but it's a risk where it's, you know, worth having, you know, because if you don't take any risk, I mean, I tell you, anyone, show me somebody who doesn't take any risk. I show you somebody who has not lived the full potential of their lives and what they could be. You know, that's just it. That's standard, you know. Tavares, what you been up to, man? I know you've been out there slaying and dealing, because Tavares, man, is he goes from dealing with stock market, securities industry, handling people's stuff, to running to doing insurance stuff, to real estate, mortgage stuff. So this young man here, man, his left brain and his right brain is he's gonna probably outlive us all, because his stuff is just moving, man. He has created more brain cells than he ever had since he's joined the Henderson Financial Group.
That's true. That's true. Yeah, it's been really busy at the office, right? So we have annuities. Allianz just had that bonus. So we're getting those in and getting those funded. Also, we're helping people with life insurance, right? IULs, and educating the world and, you know, new clients on how those IULs can impact their financial plans and things of that nature, retirement, entrepreneurs and things of that nature. And also with mortgages, right? Helping our seniors or our clients that are retiring soon, or some of them already retired, helping them convert some of their equity into that new and improved reverse mortgage.
So tell me, I know that you were working on a case. First of all, what do you think? I mean, they just cut the interest rates on mortgages half a point. Do you think? And what do you feel? You think they're going to cut it again before the year out, or what's your feeling on it?
I think they're going to continue to go down for sure, right? But I think they're going to go down slower than we expect, in all honesty. Right now, rates are, if you look online, rates are, if you got a perfect score, and you searching for a primary residence, a mortgage for your primary residence, rates are somewhere around, I would say, high sixes.
Okay.
High sixes, low sevens.
Wow, that's better than what, eights, you know?
Right. But I mean, it also depends on the type of loan you're getting, because a lot of people don't understand the interest rate would be different for a primary residence than it would be for a rental property. And then also the rate would be different for the type of loan that you get, right? So if you get a traditional mortgage, right, where you send in all your paperwork on yourself, and the loan is more so focused on you repaying the loan. So you're sending in your debt to income, your income, your tax returns, all that stuff, right? The more documentation you send in, the lower your rate. However, if you go with an advanced strategy mortgage, like a DSCR loan, right, where your investment property is focused on repaying that mortgage, or a bank statement loan, those loans have more risk, so those loans have higher rates.
So
right?
So let's talk about that, because I know a lot of people who's listening never even heard of that. What do you call a
DSCR, right?
DSCR. So I know that.
I know, but the audience may not know.
Yeah, so that's debt service coverage ratio. Debt service coverage ratio.
So let's walk through that one. So here's a guy that works for the post office.
Yeah.
And this guy, let's say he makes, $70,000 a year.
Mhm.
Okay. And he's tight, he only have a little bit of money left over. He doesn't have a whole lot of money to put down.
Gotcha.
But he sees this house next door
Mhm.
that that the person died,
Mhm.
and he wants to buy this house and rent it out.
Beautiful.
Okay, so but he didn't have a whole lot of money, and but he sees, he has an idea. He knows in his neighborhood he can get $3,000 a month for rent.
Okay.
So he comes to you and he said, Tavares, I want to buy this house. This house costs $400,000,
Mhm.
and they're renting for $3,000.
Mhm.
And what would you tell him in terms of he wanted to go for an investor loan where he can qualify based on the income from the rental property and the debt service being serviced by the tenant rather than himself? How does that work?
Okay. Love those loan types, right? Because it takes the emphasis off of the borrower itself, right? So your credit doesn't have to be perfect. You can have a 650 range credit score. You do have to have funds for a down payment, right? We're going to need that. And then also your debt to income, right? So that's another issue that we're having, since here in South Florida, property taxes are super high, and also homeowners insurance is super high, which add on to these high property values. So the monthly mortgages are, through the roof. So a lot of times when we want to purchase a property, we have a nice income, but the property we want to purchase, that debt that's going to, that monthly payment is eating up a lot of our income, a large percentage of our income, which in sometimes it can cause us to not qualify for that loan. So lenders came out with this mortgage. They say, hey, you know what? We're not worried about the person that wants to purchase the home. As long as this particular property that they want to purchase, as long as the income that's coming in, this investment property, as long as the income that's coming in from the tenant can cover
mortgage,
at least the mortgage, then we're good, right? We can qualify you based off that and your down payment. You don't have to have a perfect credit score. They call that a debt service coverage ratio loan, right? Now, if you have the more profit you make over and above the monthly mortgage on this particular profit, the better interest rate you can get, the better terms you can get with your mortgage. Why? Because the lender has less risk, because you have more than enough to make that monthly payment.
So in other words, if you can find a property, let's say a property costs, you buy it for $300,000, you're not in Alabama or somewhere, Ohio or
Right.
Missouri or somewhere like that, and you find a piece of property and you say the property costs $300,000, and then they come to you and you say, okay, it costs $300,000 to buy that property, and they ask you, well, how much the mortgage cost going to be, and you tell them, okay, the mortgage is going to be $2,500 for that.
Yes.
And then you say, oh, but they're renting for $4,000 in that area.
That's beautiful.
So even though I could be here in Miami and I can find a property in Alabama for $300,000 that I could rent out for $4,000, because you said that it's going to cost me to get that loan from the bank $2,500 a month.
Right.
But you say I can tell the bank, no, I ain't gonna pay it. The tenant is paying $4,000 a month, and then I'm good.
That's true.
And I can just go throughout the country finding those deals where property pays for itself, and there's no skin for me. In other words, it's no debt for me. It's not a problem with me.
That's beautiful. Yep.
Yes.
But Rob, one of the things also, Tavares, that they have to realize is there will be some requirements of insurance, appraisals, and things like that they will have to cover. Am I correct?
Yes. That's true. That's a good point, Mr. Thomas. So your upfront costs, right, that you have to pay out of pocket will be a credit report and the actual appraisal. So these appraisals, they cost a little bit more than an average appraisal, because what they do is they're appraising for more than the property value. They also appraise for the rent level, right? So the appraiser is going to come out and say, this property can be rented for X amount of dollars each month. So the
appraiser know in the area what the rent is going for.
Yes. Okay. And in some cases, they'll actually appraise for short-term rentals as well. So if you want to rent it out for Airbnb, like an untraditional route, they can add that to the appraisal as well. And that can help your coverage ratio. That can help your terms.
Now, to get that mortgage, will they also require that you have insurance on the property?
Yes. Oh, yes. So when you have a mortgage, since the lender's taking risks, right, that property's collateral now. They want to make sure that if a hurricane comes, like one just came, a fire, a tornado, whatever the case may be, they want to make sure that their investment is covered. right? So that they can recoup their funds. So yes, you'll definitely have to have coverage on that.
So when you're looking at that property, you've got to look at, okay, not just what the mortgage company may charge you monthly, but the other expenses that you will have to
overhead.
incur. Incur, because, and you got to continue to pay those taxes, whatever they may be annually as well. And sometimes I think that they'll include that in the mortgage. Am I correct, or am I not?
Yes. Yeah. Yes. So they'll factor all of those numbers in: principal, interest, taxes, and insurance. And if there's an HOA, they'll add that as well. So the total,
I'm scared of those.
So the total monthly payment that you have to pay to keep that property in your possession, right, with no interference, that's going to be the number that they factor when it comes to your coverage ratio. So if that total number is 2,500, we need to have at least 2,500 coming in from the tenant. If it's a little bit less than 2,500, you can still qualify, but your interest rate may go up a bit. They may require a larger down payment just to reduce the risk on the lender side. So it's still possible, right? And some people, you may ask, well, some people, why would you buy a house where you're not cash flowing on a monthly basis? And some people do it for tax purposes, right? So some people have high incomes, whether they, may work for Apple or Microsoft or something like that, and they want to reduce their tax liability. So they may purchase the property not so much to recoup income on a monthly basis. Why? Because they're making a good salary, but they need tax deductions, right? So they may purchase these properties just for the sake of reducing their tax liability on an annual basis. So they may not want to make a profit each month.
Wow, and it increases their portfolio, because
that's true.
Yeah, right. All of a sudden you've got these properties, and believe me, they're not going to stay the same. The value is going to increase annually.
Yep. Linda, you told me about a loan out there, and I don't know if it's just here locally in South Florida, or do they have these type of loans when talking about mortgages throughout the country? You said a loan that was less than 1%. What kind of loan is that? And tell us your experience about that. And is that that's just isolated to one particular area?
That is federal money for.
Tell us about that federal money.
Housing. That is for a loan that developers competitively compete for. That is a loan that your local municipality will put out a request for proposals for, and us developers will compete to see who has the best project coming up. We got 21 unit, a 5 unit is for old people, affordable housing. And if you win that proposal, because it's federal money and they want us to build affordable housing, the interest rate is 0.5%, less than 1%. And so again, that is to encourage developers to build affordable housing. So there's a whole lot that's attached to that. And number one is we're going to give you cheap money. We want you to charge cheap rent, and we want you not to charge market rent. Mm-hmm.
So we're looking at an area. We had went, James T, myself, Antonio, last month. We went in an area called Warner Robins, Georgia, over by Perry.
What?
Warner Robins, Georgia. It's about an hour and almost 2 hours outside of Atlanta, about an hour and a half outside of Atlanta. And it's a growing area. It's over by Fort Valley College, University, I think it's called Fort Valley, and located near Perry, Georgia. And it's a growing area. And we're looking at probably buying tracts of land to also develop housing. So you're saying that there might be a possibility from federal grants that if we want to provide housing, now there may be an opportunity that we can get some loans that less than 1% to finance that building of that housing.
Absolutely, but it depends on your municipality. They may not have those federal funds. They may have reallocated it for other people's projects. So I would say it's not a given, but you definitely got to do some research and go to your local zoning department, housing department, and see if they still have those federal funds for housing. And if they do have it, because they can have it for eviction prevention. They can allocate it in many different areas. So you want to make sure that your local governor, mayor, commission, council has made affordable housing a priority and has made that loan cheap money to encourage developers. So it depends on the area and it depends on your local government.
Okay, so we're gonna need you like a flashlight to go when we get ready to start, because we need to know what to ask for, who to ask for. But we definitely going to need your
service. You want to ask before you buy.
Excuse me?
You want to ask and find out before you buy.
No question. But we're just so glad and feel so blessed to have you with this information, like a flashlight, to uncover the hidden jewels that most people don't even know that there is. So ladies and gentlemen, that's what we like about the Henderson Financial Group and people who we partner with, Linda James T, Tavares, because we're on the hunt. We stay on the hunt, and we don't believe that there is no challenge that we can't conquer. We know that if there's a challenge, we know that there's a way. And there's always a way. And just because you don't know, that don't mean that it is not out there. And a lot of development that you all see that's going on throughout the country, you all think that you have to do it. You can only get involved only one way. But there's so many back doors that you can go in that cost you little or nothing. That's what the information is about, that you don't know. Information is key, I'm telling you. And a lot of people, it's not their world. You didn't know it because I would say maybe 5-10 years ago, Linda, it wasn't our world. We didn't really know about these hidden jewels. But every day we're finding out that there are other avenues, there's other ways to accomplish your goal, especially when it comes to building wealth, generational wealth, and improving our net worth. So we're here, and we're going to talk to you about it. Switching back to you, Tavares. The other day, I know that you was working on a situation that was slam dunk, and this was a guy who didn't know, but he came and he was talking, and you suggested a reverse mortgage. And this guy, first he was negative about it, but then when you told him, forget about the name, forget about that, you told him about what it does and how he can benefit, and then he just got bright-eyed and bushy-tailed, and he says, "Where do I sign?" Tell us about that client. You don't have to call his name, mm-hmm. but tell us about that situation. What happened when he came into the office for one thing, and then you discussed with him another way.
Okay, so this particular client, right, came into let me rewind. He's 84 years old, and he has a monthly mortgage of about $4,200.
Whoa,
84 years old. Right, and he bought the house in the early 90s, but he had to refinance a few years ago to pay some bills and help his kids out and stuff like that. So now he's 80-something years old with this high mortgage. And
he can afford that? No, I guess he's paying it.
Yeah, he can afford it. He can afford it, but it's eating a large portion of his income.
Is he single?
Right. No, he's not single.
Linda. He's not single. He's 84. Forget single. He's 84.
Okay, all right.
Focus on that. Forget all that single. He's 84. Just think about the anatomy in the body. In the mind. Okay, that's all. And I didn't say
good
he
point,
was.
Good point.
I had to save her because she's just thinking about ching ching. Just think about all the ancillaries.
I apologize. You're right. Good looking out, brother-in-law.
All right. Go ahead.
So he came in. When I saw his mortgage statement, I was completely blown away. I was like, wow, that's crazy. And there's a solution for it. So when I first brought up the reverse mortgage, he put up a shield, like a huge metal shield. And he was like, no, I don't want to hear about that. I heard bad things about it. Don't want to go that route. But I just educated him more upon it. I continue to speak about it, and I spoke about the perks and the benefits and how it can help his particular situation. I'm like, you know what? You have, a nice chunk coming in, but there's also a large chunk going out. And just imagine if we can avoid that large chunk going out to a mortgage and possibly invest that money so we can grow your assets. And he liked that, right? He said he'll want to be able, he'll be able to travel more. He likes cars, so he may be able to, you know, buy another car.
Yeah, he loves Mercedes-Benz. He's a Mercedes-Benz man.
Yeah. So the more I spoke, the the more he began to listen. And yeah, so right now we're actually in the process of helping him out. And these loan types, the new and improved reverse mortgage, is the most fulfilling loan type to me, because I can really see how I'm able to impact someone's lives. It doesn't pay the most, right? But the impact is the greatest. And that's what I love about it, like, dearly. So he'll be able to, moving forward, he'll be able to remove that monthly payment. He'll still have to pay his property taxes, homeowners insurance, but he's freeing up, you know, what, $2,700 each month, and you can do a whole lot with that.
Tavares, question. Tavares, did he tell you what he had heard about reverse mortgages that had turned him off?
He just said that he heard negative things about him. He never heard anything good about it.
Oh, okay.
And when I was speaking about it, he was like, "Are you sure this is the same reverse mortgage?" I was like, "It's not the same. It just has the same title. They made some updates to it a few years ago, and you know, Harvard and all these
MIT,
schools,
yeah,
they're studying reverse mortgages, and they have new data on these mortgages, and they're like, yo, these are really good, especially for our seniors, to help them, you know, preserve their income, especially in times where inflation is going crazy, right? Groceries and insurance and things of that nature. You want to have funds for the unknown. Also, healthcare expenses. When you're 80 some odd years old, you want to be able to pay for the care that you need, right? You don't want to have this nice house with all this equity, or have a large payment and not be able to take care of your body.
So Tavares, we're gonna role play. I'm that 84-year-old person, and one of the things I heard about reverse mortgage, and I'd like to hear your response, is that I want to leave the house to my kids, and with the reverse mortgage, when I go to the pearly gates, the bank will take it. What's your response to that, and how do we explain that that's not the case?
Okay. Real life scenario. My grandmother, who's living now, she has a reverse mortgage, right?
Okay.
And when I was a kid, she took very good care of me. I lived with my grandmother for the first 4 years of my life, so she took care of me. And now it's the time for me to take care of her. So I pay her property taxes, I pay her homeowners insurance, and of course she wants to leave the house to me, right? And even though she has a reverse mortgage, we're still going to do that. So when she goes to heaven, right, you have 3 different options. And the first option would be, I can just pay the house off outright, right? Definitely don't want to do that, but that's an option. And you could do that if the senior has life insurance and things of that nature. You can take the proceeds from the policy, house off, and boom, now you got the house free and clear. That's one way you can obtain it. Or you can say, you know what, I just want to refinance the property, which what I plan to do. So when my grandmother goes to heaven, I think it'll be $100 and some odd thousand, maybe $200,000. What I'll do is I'll just get a loan for that $200,000 and just pay it back over 30 years, and put a tenant in the property and let the tenant pay it for me. And like Mr. James T said earlier, that's going to add to my net worth, right? So just because there's a reverse mortgage in place doesn't necessarily mean that the house is going to, you know, go from your family's lineage. You can still obtain it. You guys can just call me when that time happens. I can walk you all the way through it. But you want to have certain things in place. So you want to have maybe a ladybird deed in place, or maybe a trust in place, a living trust in place that says, hey, when I pass away, this asset of my house, I want it to go on to this person. Now you want this person to be responsible, to have, you know, a strong credit score. They don't have to have a whole bunch of money, but they want to have a decent credit score and a decent mindset, right? So that's most important. You don't want to leave it to, you know, somebody that's getting high and drunk, or somebody that's not able to stand up to that resposibility. But the bank doesn't want your house at all.
No, they don't.
They don't want your house.
So
they
that's a myth. That's a myth. People who don't have good information, you know, bad rumors just start and just circulate quick, man. You know, it seems like bad information circulate way fast. You know, negative than the good stuff. You know what I mean? Because it's kind of hard to find the good stuff. You have to really know somebody to find the good information. The bad information, man, you can get that from anywhere, anybody. You know, free will, free. Because the same thing happened to me. My mom passed away last August, 2023, and she had a reverse mortgage. And after that, man, I just rent the property out, and the property we rented it out for far more. So people just don't understand, and they say that 95% of people get their information from the other 95% of people who are not rich or wealthy. They don't call the 5%ers. They talk to the other 95%, and they all in it together, and they all get on the highways at 5 o'clock and can go 20 miles an hour like school of fish. They all stick together. So you don't want to. You want to be outside of that. You want to think outside of the box. But there's a lot of cases that the new reverse mortgage, because even if your house is paid off, tell us about that when your house is paid off and you don't want to take no money out. And you just want to use your house to make more money. How can you do that?
This is the best one, right? So a lot of times a senior home will be paid off, right? And they'll have a bunch of equity in their house. And equity to me is just a bragging right. Me, I like to tap into that, right? I don't want to just say, oh, I got $400,000 worth of equity or $500,000 worth of equity. Like, I want that to impact me in my life, in my world. So there's a situation, the case that I worked on, house was free and clear. And that's another misconception. A lot of people think that reverse mortgages are for poor people, right? And that's hugely false.
A lot of wealthy people got reverse mortgages. So tell us about when your house is completely paid off, how you can use your house better than you ever even imagined.
Right. So I like to call it converting your equity into a line of credit, right? Now, a line of credit is cash that you have access to if you need it for whatever reason. Now, the new reverse mortgage, they have a line of credit where your equity will sit into, and it'll earn right now about 7% while it's just sitting there. So it's almost like having a savings account, but not like at Bank of America Chase where you're earning less than 1%. You're actually earning about 7%. And anytime you need some money, you can just access it and use whatever you want to do it for.
Why your mother don't have that? She has a reverse mortgage with a lot of equity.
Say it again.
We need to do that for Mom. My mother has a reverse mortgage that she got, how long ago? Maybe 15 years ago. So I didn't know there was this new product out there.
Yeah. We have to have Natty probably in terms of power of attorney to be able to sign for her. But yeah, we can entertain that and use that. We have to look and see how much equity she has in there. So go ahead.
Wait, question before you go further, Tavares. Must that only be your primary primary home or place of living, or can it also be an investment property that you have?
Great question. Yes, it has to be your primary residence. That's one of the requirements. You have to live in a house to do a reverse mortgage on that particular house.
Okay.
Yeah. So here we got a person. Go ahead, James.
No. I think that's important because, like Linda was saying, if there's a reverse mortgage, does the person live in that particular house, or is it being rented, or whatever the case may be? Because with rental property, I'm sure people would love to be able to take rental property and set that up.
Yeah, that's too good to be true. That's too good to be true. So reverse mortgages are primary. They are restricted for primary residence.
Okay.
Primary. Matter of fact, you got to prove that you live in the house
every year.
They send a notice to prove that you live in the house. Now people are getting slick. They living in the house, but they renting out a room too. So that's been a little creative. But you are in fact living in the house. You follow me?
Okay.
But there's a lot of people who've worked so hard, and their main thing was to pay off their house. But now they have this house that's not, the equity is not going. When you have a paid off house, you don't make one dime. Your house grows in value based on the market value, the appraisal value. But there's two things that could be going on. You could be people are losing out on the money in the walls. And that's what we're talking about. We're not talking about the appraisal market value. So let's say this man, here's a guy that paid off his house. Now it's worth $500,000. He lives in the house, but he feels good. He has no mortgage and he feels good. He feels psychologically sentimental is good for him. That's what his wife, they worked for that. Has no mortgage. They can't take it from him, right? Bam. But now he looks at Zillow, and every year his house goes up, let's say 5%. So he likes that too. But that's not the only way. He's missing out. This is what Harvard and Yale, a lot of these wealthy people are doing. They saying, hey, since I'm in this house, I don't want a mortgage. But there's a new reverse mortgage says that all the equity is in the walls. Not only the appraised value can be going the market value, but the money that's in the walls can be earning interest also. So tell us about that, Tavares.
Yes. So that line of credit is so powerful because, one, you're earning interest on it. You got access to it, and you can use that line of credit to purchase other assets, right? So I was working on a case, and this particular family, their home was free and clear, and they also owned 5 rental property that was also free and clear, right? So they wanted to started passing on their inheritance to their children, but they didn't want to wait until they passed away. So they was like, you know what? How can we give our kids some money? Because their kids wanted to start real estate. They wanted to start building houses and stuff. So like, how can we help our kids now so they don't have to wait till we pass away and they start inheriting our stuff?
And they didn't want to sell their house.
Right. So I told them I have the perfect thing for you. They didn't want to take money from their IRAs and their retirement accounts. That's a tax penalty, or they got to pay taxes on that stuff. So what they did was we did a reverse mortgage. House was free and clear, so they was able to access like $300,000 free and clear. Now, mind you, when you borrow from a reverse mortgage, when you receive that loan, that's a loan that you don't have to make a monthly payment on. So where on earth can we borrow money and we're not obligated to make a monthly payment? So that makes huge sense to me. And then when we borrow that money, instead of going to the car dealership, if we can go buy a vacant lot and build a duplex or a single family home even on that property, now we just turn 1 into 2, right? And it's so powerful, right? So, and you're building that home with cash, so then you can refinance that property, pull the cash out and build another one, and then do another one, and then do another one. So the reverse mortgage can be a seed that you plant to build a whole real estate farm, so to speak. And it's super powerful, and it's all on how you use it, right? So we want the most important part is to debunk the myths, to kick the myths out, and also enter or be open-minded to let good information into your brain, and see how this information can change and impact your life for the better.
Okay, I hear something. I'm like Linda now. I hear the people saying, well, I have a mortgage, but I have a huge amount of equity in my home that I'm living in. Can I also make use of this proposal you're speaking of?
Yes, for sure. So you're saying they owe like $50,000 or $60,000, but they have a crazy amount of equity,
right? I mean, there are areas now where people that I even know of people that bought homes when they were like $30,000, $40,000, but now because of quote unquote the word that they think is a bad word, which is not, gentrification, the value of that property has increased. I mean, in areas where mom and not even going to grandma, but where mom paid $10, $20, $30,000, they're selling the homes now on the same block for $400,000, $500,000, and $600,000. So there's plenty of equity in that home that's not being used.
Yes, and that's what we're talking about. There's so many people that don't understand across the country how to use what they have, how to maximize what they have. And you always want to, since you're blessed to have a home, you want to be able to maximize and have your cake and eat it too, so to speak. So when you have a situation like that, where now the property value, some people property value is $600,000 and $700,000, they retired, they own low income. So when you're on low income and and your house is paid off, you don't want to get a mortgage and have to start all over and risk of someone taking your house because you miss a mortgage payment. So that thinking can be brushed away with this new type of reverse mortgage. So now here you got a person that got a $600,000-$700,000, even $500,000 house, and they have no mortgage. At this new reverse mortgage, you can put a line of credit on that property that's going to pay you, even if you don't take no money out. You just say, okay, I want to put a line of credit on it, but I don't need no money. that line of credit gonna grow at 7%. Think about that. They say, okay, you got $300,000 line of credit on this house. It's growing at 7%. We're not talking about the market value of the value of the neighborhood and the house. We're talking about your line of credit is making money for you.
For you. Amen.
So now at 7%, and you got $300,000, that's $21,000 new money. Then they give you a checkbook. You could use it to say, okay, I want to pull some money out and I want to go buy a car. And then, so then you go, oh my God, how much I got to pay a month? You ain't got to pay nothing. Where in America can you do that? There's so much misunderstanding. If I was God, I'd say, Lord have mercy. These people praying for me, and I done gave them all this stuff, and they still don't know how to use it. You know what I mean? It's like somebody who just got gifted an automobile, and they walk to work every day because they don't know how to drive a car. But they walk 5 miles, but they just got gifted a car. Damn it, learn how to drive the car so you can start walking 10 miles a day. You got a new car, you got something that you just not even using and don't even want to think about using because somebody else who walking to work 10 miles with you telling you can get in an accident in the car. You can get in an accident in the car. Don't drive the car. Go, let's get ready to walk 10 miles to work and walk back 10 miles to work. What, you got a brand new car over there? If I was you, I won't get in that car because you know what? I heard you can get in an accident in the car. Learn how to drive the car so you can stop walking 10 miles. That's simply what's happening with so many people. But I'm gonna tell you something: the smart money people that's using it, they say they don't feel sorry for people who don't understand how to use what God has blessed them with, because they feel that they're ignorant and they feel that if you don't seek, ask, and knock, shame on you. They don't feel sorry for you. And there's so many people, good people, who just got bad information from other people who got bad information.
Amen.
True.
Tavares, I've been hearing there's a development that's promoting 3.99% interest rate, 30-year fixed primary resident, but you have to use their loan officers. Is there a 3.9? I suppose maybe they're buying down the rate because it hasn't gotten that low yet to 4% conventional.
Not at all. I not at all. I wish I had. I wish I had access to those.
Be careful.
You gotta be careful. It always come back. It's always trade-offs.
Yeah, I wish I had access to something like that. That's incredible.
Yeah, it is incredible. It's trade-offs though. It's always something. Always trade-off.
It's something that it's got to be
always
something.
A trade-off. It's always trade-off.
Yep.
So to our viewers and listeners out there, if you have any comments or questions, hey, put it in the chat. Don't just sit there and talk with whoever is sitting next to you.
What about the first-time home buyers? Are you big on that? I mean, you think that's something that people should take advantage of first? Because a lot of the kids can't afford these houses now because, all over the country, the appraised values are up pretty high. And credit is something that we can't stop talking about. You got to pay your debts and have good credit, and that's still.
Miami-Dade County has a lot of money out there for first-time buyers, and especially if you're first responders, police, corrections, firefighters. I've seen them get upwards of $80,000 in down payment assistance for first-time buyers. I'm not sure if the mortgage industry, Tavares, has incentives, but Miami-Dade County, it's a lot of money on the street for first-time buyers. It's from what I see.
Yes, down payment assistance programs are really important right now because of the values and things of that nature. And if you can find one or two, I think it's good to jump on that. I do have access to a few lenders that have some down payment assistance programs. One of the lenders, they got a real bad rap when they put their down payment assistance program out there. So they kind of pulled back on it. But I have access to about 90 different lenders. So it's not extremely popular, but I can find a few. I can do some digging. And then they have some criteria that you would have to fit into to qualify for the down payment assistance, like income restrictions and things of that nature. Which kind of goes against the being able to afford the property, right? So you may have they may say, well, you can't make more than $80,000, but to maintain the mortgage for this particular property, you got to make it at least $11,000, which is kind of like a conflict of interest. So those down payment assistance programs may not work here in South Florida with these South Florida rates or South Florida prices. But it may work in other areas, maybe like a Jacksonville or Alabama or different parts
Missouri,
of Georgia
somewhere,
and stuff like that.
Right.
That's been my findings on it. They are thinking about a credit of $25,000. Some people say it's going to go towards down payments and closing costs, $25,000, and some people are saying the $25,000 is going to go towards a tax credit, right? So as far as with this election that's coming up. So it's kind of in limbo. I think instead of giving a $25,000 tax credit, I think it'll be best to give a credit to sellers, and also builders, giving those credits. That way, that'll add more inventory to the market, and that's pretty much what we need. We need more inventory, and more inventory at lower values, I would say, because if builders can build at cheaper prices, then that means new investors or new homeowners, that just graduated from college, they can come in and buy those properties that builders had, incentives on to build at lower value.
Well, that made me think about, let's talk about let's talk about how you can help clients that have a vacant lot. They found a vacant lot.
Yeah.
And they want to get a construction loan. Walk us through that process when someone has Big Mama left them with a vacant lot, and now they want to build a rental property on it. They don't want to live there, but they want to build a rental property. Now, I know as soon as if Big Mama left them a house, and we're talking about they want to build a house on that lot so they can live in it, that's one thing. But the story changes and the pathway changes when the person said, I don't want to build on that lot. I want to build on the lot, but I don't want to build a primary residence for me to live there. I want to build because I want to rent. So now we're talking about something else, right?
As far as down payment wise, it's pretty much the same process, but the down payment is the only difference, I would say. So if you have a vacant lot that you want to build on, first step is to, once you have your contractor and everything, we have to get your contractor approved, right? So we can get you a construction loan, but the lender want to make sure that this contractor is a good morally person.
Ain't gonna run off with the money.
And you're also gonna do his job. He got some experience. He's been building for a while. You don't have to be building for 10, 15 years. I think 2 or 3 years would do. They're also gonna check his credit.
Now that was something that was, listen, I'm gonna tell you something. That was something that was eye-opener.
Yeah.
We have a client that have some property, and this builder who has history of building, and she wanted to get him. So we said good, and she had got that contract. She had the architectural designs and everything, but Tavares had set it up where a lender, a banker, was going to finance the project. Everything was beautiful, but the contractor credit was bad.
They checked the contractor credit?
They checked the contractor's credit.
Yeah.
You
Yeah.
gotta have at least a 620. Contractor gotta have at least a 620.
Yeah.
In this contractor had just went through a divorce. I'm talking about fresh out of a divorce. So he was like, man, all my life I had a 700
I
plus.
don't like that.
I just came out of this situation. Yeah. But I asked several different questions. I was able to get around that and get him approved. We was able to use his business instead of his personal credit. So we used his business credit, and they accepted that. And the people didn't even tell me that I can use the business credit. I was inquiring, asking questions left and right, and I found the hole, and we were able to jump through it. We got him approved. After the contractor gets approved, then we have to get the project approved. So we got to send in all your plans, all your contract, the time frame on how long it's going to take to build, the budget, all that stuff, all the details. Once the project gets approved, then we can move forward.
Now, see that process, Linda. There's always trade-offs, because there's some people that says, I have a lot, Big Mama left me, and I'm going to get a builder who have the experience to build, and I'm going to pay cash for the house. That could be good, but then again, when you borrow money from the bank, the bank gonna do a lot of due diligence, because sometimes when you want to self pay, pay the contractor the bill, you might not check his credit. You know what I mean? You might not go through all that, but a bank, because bank has other people's money, depositors' money, and they invest the money. So the bank gonna take them through the dry cleaners, man. He gonna take them to the washer and the rinser, and that could be good. Even though, let's say I have a property, let's say I want to get this contractor to build, I'm just gonna pay cash for it. It's better for me to go through a bank and let them take him through the washer and the rinser to make sure that he's good. You follow me?
South Florida has a bad reputation of fraud. Let's face it, we're the number one state in fraud, and people that run off with money, and so that not a bad thing. It's really not a bad thing, but man, that's interesting.
Yeah, because the banks feel like if we're gonna give this builder money and draws to put, when he gets ready to do the concrete, pour the slabs, they give it to him. Then they send an inspector out because they want to make sure before they give this builder the money, the bank, they got a guard. You know how tight banks are, so they got to make sure that he did what he said he's going to do. And the inspector came out and inspected it. Then they give him another draw. If you're trying to build a house on your own, you might give Mr. Charlie the money. He might just run off and never come back. So it does, even though it's tedious and it's checks, and you have to measure, make sure that everything is good. It's a little slower, but at least you have some sort of security when you finance a construction loan.
Well, in my developer world, banks not only want the resume and history of the contractor, the general contractor, but they pay on a reimbursable basis. So that contractor needs to have a line of credit. In other words, we'll reimburse you for that roof, and we'll go out, we'll take a look, and then we'll pay you the money you've already put out. So
see, that's what I was thinking when I was listening to all of this, is that it's not just the contractor that you might want to be concerned about, but also that project manager. Rob, what do you think?
Oh yeah, the project manager has to make sure that everything is tight.
Because if they're in cahoots, and you don't have any checks on them, oh my goodness, all of a sudden you look up and you don't have contractor nor project manager.
Yes. That's why Mr. Bill Dozier School Craft Academy, Urban Craft Academy, it comes in to educate you a lot. So to Linda, say you didn't know that in this case that we was working with, that the bank was going to check the contractor's credit. You sound like you was a little shocked with that.
No, they don't check. In my developer world, they don't check their credit. They just want to make sure they're experienced. They want their resume. What have you done? They're going to go out and look at your project. But the way these banks protect themselves, we will reimburse you.
So that's the commercial. So you're talking about buildings. That's commercial world. So when it comes to in this situation with this guy,
I'm shocked at what Tavares just said. That's
residential. Residential.
Yeah. So and you can also, when you have a construction loan, let's say you don't own the land, right? You can actually factor in the cost of buying the land and the construction cost inside of your construction loan, right? So they call that a construction purchase. But if you already own the land, let's say you own the land, you've been owning it for a year, 2 years, 3 years plus, and you want to build on that lot, they call that a construction refinance. So a construction refinance, if you already own the land, or if you want to factor in the purchase of this lot, so you don't own it yet, it became available, let's say it's in Fort Myers or Fort Pierce somewhere, and you see this lot is available, you can factor in the purchase price and construction, and that'll be a construction purchase loan. So we can do both construction purchase or construction refinance if you already own the property. And
I'm listening to you, and all of these things assist people to increase their net worth and build wealth, but you got to really have it in you to think that way and take that risk. It is a calculated risk and an educated risk, But even when I was buying back in my 20s, they were like, why would you do that, girl? What if you don't get a tenant? Aren't you scared? What if nobody rent and then you have to pay? You have to really be a certain individual to say, do your research. I'm going to go and build it and know they will come. It takes a certain type of person. And I think that's why, like you said, Robert, coming to some like the Henderson Financial Group, who we can demonstrate. We have plenty of clients that are successful at it. And so hopefully we'll have people and sort of calm their nerves. But it takes a certain type of person. It really does.
But don't get to the point that you do nothing. Don't let fear freeze you.
Mm-hmm.
You know, what it should do is, hey, as a matter of fact, don't let fear come in there anyway. Walk through it. And as Robert said, don't talk to those 95 percenters. Find some 5 percenters. You know, talk to them and be encouraged, because you're saying, I have something, but I don't know what to do with it. So I'm going to call the Henderson Financial Group.
Yeah, and you know, and I often use the term the 95 percenters because it's been documented, and the system that we live in, they know that 95% of the people from when they were born are going to be dependent on the government and are not going to be rich or wealthy. Only 5% of people born, people that was born yesterday, they already figured out only 5% of the babies are going to be rich or wealthy. 95% of people are just going to conform and just do what everybody else do and just try to get along. No, that's the real statistics. That's the real world. So when you find yourself surrounded by a 95%er, you can't expect a whole lot. Most of them just want to eat, go to the bathroom, wait for the week, go to the, wait for the weekend, have some love. Yeah. Yeah. I mean, it's that's just the way it is, man. I mean, that's just how humans are, so don't feel bad now if you feel that none of this stuff interests you and that you won't do none of that. That's the way you was cut. No one can give you desires. We're talking about people who have a desire and you want more. That's it. I mean, and I'm thinking about, maybe when I just said have a desire and want more, that made me think about the movie called The Matrix. I mean, when you are who you are, and if you are living this time right now, well, you just don't care about a lot of things. You just want to be able to eat your same sandwich every day, watch your favorite movie. There's nothing wrong with that. And I want to be perfectly clear. If you're happy and you're content, then that's you. No one should make you feel uncomfortable to want to go out and want more and be all that you can be. Because if the thought doesn't come to you, that means that it's not for you. The desires come from the Creator. So when you say, hey, man, I want more, then that says there's something for you to do. Now you act on it. But sometimes some people like I've met a lot of people that says, man, they don't want to own, they don't never want to drive a car, and they don't ever want to leave their local community. They don't want to travel, and they're perfectly good people. So it has to be in you. So I don't want to belittle you if you not want to be an entrepreneur, if you don't want more, if you don't care about going to Italy or Africa or Spain. And some people don't care about traveling. Some people don't even care about being on an airplane.
But Rob, I really have to go to the other edge with you, because they may not want to, but I really do believe that we were all created with a plan and a purpose. Now, if we don't seek that purpose, if we don't seek what that plan is, if we don't understand that there's a promise, and like you said, I use the analogy of people say, I want. And then I remember what scripture says. God said to Moses, what's in your hand? You out there trying to, grab the world, but you're not dealing with what's in your hand. There's something in your hand that if you would use it, it will produce for you some of those things that you desire to have. And yeah, you can be like Neo. Come here, Thomas Anderson. Hey, I know you think you living in the real world, but there's another world. Now I've got this blue pill and this red pill. And if you willing to, hey, take this blue pill, you can go back to sleep and wake up tomorrow morning and be your
And
ordinary.
a lot of people take that pill.
Right. But now you can also take this red pill. And this red pill is going to take you to a place where you've never been. But now you're prepared. You're already prepared to handle that. But you got to believe that that's true. So which one you want to take? Take the blue pill and just lead your ordinary life, or take this red?
Hey James, you know what? Just what you just said, I bet if you asked that to the people in the country, I'm willing to bet you that only 5% will take the red pill. The 95% will take the blue pill.
Well, probably Rob. Probably that's what's happening now. But if we can tell them or convince them, if they would stop for a minute and check themselves and realize that there is greater in you. But, you know, because sometimes, man, people just, and we know we deal with it. For those of us who have children, we've got to make them believe that there's greater in them. Particularly if they believe mom and daddy's supposed to provide for them for the rest of their doggone lives. You know,
that's all they seen. That's all they seen.
Right.
That's all they seen.
You know, but there's greater in you than what you see, and look for that. Look, I was on a conference call last night with a lady, and I think she said she was in Austin, Texas, working on a project, and someone had referred her to me, and and I just asked her, tell me your story. And after she told me her story, you know, I said, okay, now obviously something is saying something to you that's not a part of the story you've told. And she said, how'd you know? I said, because you're seeking information. You know, you're asking. So if they would think about what they're hearing today, and if you know nothing about this, you can simply say, what do I have? What do I have? A home. I have a job. Maybe I need to call the Henderson Financial Group and tell them, you know, hey, I want more. You know, and I want to believe that I can do more. Can you help me? You know, it may start with healthcare. It may start with, hey, talking to Tavares. It may start with seeking out. We've got some property that somebody left, but it's in a trust, and I got to deal with my family. Well, nothing is going to come easy. You know, you're going to, hey, I mean, nobody, if they dropped it on you, you would know what to do with it unless you went through the process, you know, of trying to find out not the good, but the better and the best. You know, what's the best way to do that?
An adult. And I remember always trying and telling Robert, we got to help the people. They don't know. And he said, Linda, no, come, wait until they come to our door, because it is so difficult to get a grown person and motivate them and be their cheerleader. And girl, you can do it. And come on, guy. It is so hard. It drains you.
That's a job. That's a job. And I don't want a job. I haven't had a job since 1969. I don't ever want another job.
Think about what you all are saying. Think about this now. Now, right now, today, if I propose this, there's two scenarios, and you have to pick one. And I want the listening, watching audience, and I want y'all to post this. Post a 1 if you were offered a life of guarantee where you will be taken care of. You don't have to wonder or worry or hope. You will be taken care of. Your needs, your basic needs, livable needs will be taken care of. If you want that, and you don't have to worry about starvation, you know exactly how much you're going to earn, you know exactly where you're going to live, and you're comfortable, put in a 1 in the post. Now, that's a 1. How many of y'all will take door number 2? This is what it says. Door number 2 says you could live and experience more than you ever could imagine. There's unlimited potential.
Mm-hmm.
But there's no guarantees. You could fail. You could fail.
Mm-hmm.
But if you don't fail, you will live a magical life. A life where it's like heaven. That's door number 2.
Okay.
That's door number 2.
I'm like Pernell.
But you could fail now. There's no guarantees. There's no guarantees. You could fail and you could be poor and homeless. All right.
Let's go.
How many of you all would take door number 1? And how many of you all take door number 2?
There's no wrong answer.
No, there's no wrong answer.
No wrong answer.
The United States government
will take care of you.
Will take care of you. Okay? You don't have to worry.
Mm-hmm. Mm-hmm.
What I just proposed is international data. They know what the people want. They know 95% of people will take the secure spot. That's why people want a good job with benefits, and they don't care about how much they're worth. Long as they're getting a decent pay where they can eat, they can take 2 weeks or 3 weeks vacation, and they can show up and they okay and they got a house. That's all most people want. It's these 5% of us. And believe it or not, the 5% develops the world. The 5% owns the McDonald's, the dealerships, the cars, Gucci, Prada, the designer clothes. That's the 5%ers, because when the 5%er who don't have no certainty, those are the ones that come up with ideas. Those are the ones that create computers. Those are the ones who create iPhones. Those aren't the 5%ers. The 95%ers now, those are the ones that they ain't create nothing. They just, what you got for me? Let's go buy it.
But we need them too.
No. That's what makes the world go round. We need them. We need them. And you can, and I'm gonna tell you something. A lot of people want door number 1 because it's comfortable. It really is. I'm not bashing it, but I'm saying when you want to be a 5%er, look out now. Be careful what you ask for. In the Matrix, do you really want that red pill? Or because it's easy to go back and eat that steak with that blue pill.
Wake up tomorrow morning and say, I was just dreaming.
That's right.
It wasn't a nightmare. I just had a dream. I dreamt that there was a better world out there.
That alarm clock goes off.
Hurrah. But I dare you to dream. I dare somebody to wake up and dream 6 numbers. I bet you they don't play them 6 numbers. But now you can dream that there's a better world and do nothing.
That's okay.
You dream them 6 numbers and you go, I got to go.
That's why the poor people play the lotto. They pick number 1 where they guaranteed, but they do dream, so they play them lotto. They say that the poorest people pay the most lotto. People that don't have $500, $400, they don't have $400 in emergency, but they spend $400 every year doing scratch off because that's the dream. That's the dream, but they ain't getting ready to go and do what a 5%er do. No.
Right. We got to get out of here.
What Ms. Anna Dupree say? 2, failure with unlimited potential is not really failure. I like that. Oh man, Antoinette say 2. Miss Redhead said 2. Parnell say 2. Now, okay, I got y'all. Y'all Henderson Finance, y'all understanding money crew. Y'all saying they're gonna 5%er. They want to dream. They want to be all they could be. Oh man. Hey, there's a book called that. One of my favorite books. Everybody in the office have read it. And it's called The Dream Giver. It's not a 300-page book. I don't know. Maybe it's a 95-page book. But it's what I just talked about it talks about that, and it tells it in a fantastic metaphoric story. It's called the Dream Giver. Y'all check that out. It might be on YouTube free, or you can audio or something. But we read that maybe about 8 now, almost 10 years ago. But it's such a great book. It's called The Dream Giver.
You sent it to me.
I sent it to you, right? Remember that? Yeah. Oh man, that's what we do. We share new thought, new ideas.
Okay.
Listen,
hey, we gotta go.
We gotta go.
Hey,
you want to say anything else? Hey, listen, if you guys want to understand more about the new reverse mortgage, if you want to understand more about mortgages, if you want to buy a piece of property, a rental property, if you want to pull equity out of your home, if you want to check the rates, call 305-825-1444. Ask for T. We call him T. His name is Tavares Jones. He's here, and he'll help you out. You gotta ask. Don't be afraid. Being a 5%er ain't bad. I mean, it really has its privileges. I'll say it really has its privileges. You know what I mean? And if you're at 2%, if you're number 95%, that's okay. Maybe you have 1 foot there and 1 foot over there. But call the 305-825-1444 and inquire, ask, seek, and knock. Linda, you want to say something? Oh, George, you want to say something? I'm gonna pass it. Mic to everybody. T, you want to say anything else?
Yeah, and if there's any seniors out there that may have a mortgage, or any person that may be related to a senior, maybe your mother, your grandmother, right? And they may have a mortgage, or they may have a paid off house, right? Give me a call, and I can look at their situation to see if this new and improved reverse mortgage will be a good fit for them. It's not for everybody, but we want to see if it's a good fit for them. Maybe they can relieve some stress, right? And they can have some extra money to travel, just to live freely.
Get that roof done.
Right, get the roof
done.
Get
them windows clean,
Get the cabinets done.
Get the cabinet.
Maybe even get a new car.
Yeah,
right?
Stop that Ford from bulking it up. Bulking up for the Ford unlevel. Do reverse mortgage. Make it feel good while she's alive.
Right.
Yeah.
So give us a call.
All right, Linda.
Help y'all out.
Yeah, great show. I'm just listening.
You always got something to say. All right, James T, last word, brother, and take us out with prayer, because we need prayer.
Oh, we're good. Hey, thank you everybody for tuning in, and of course, we encourage you to check in with the Henderson Financial Group with whatever situations that you may have dealing with finances. And of course, even with health insurance, buying homes. Wait, Robert didn't even. We've never talked. Have we ever talked about what is it? The people if they want to buy a home, that they can contact the Henderson Financial Group.
Well, you just mentioned it right then.
But anyway, hey, the Henderson Financial Group, they're here to serve. So, Father God, Lord Jesus, Holy Spirit, we come before you right now in this right now moment, thanking you for Linda, for Tavares, for Robert, and everybody on the staff there at the Henderson Financial Group, and asking that you would continue to inspire and encourage them and strengthen them, protect and keep them mostly. But for those people who've been listening, God, we ask that you would place on their heart the ability to at least consider taking risk, because you have a plan, you have a purpose, and you have a promise for all of us. And all you've asked us to do is to ask you according to your promise, and you will give us the provisions that you have stored up for us. And many of us don't know what's in our hand, what's in our immediate area that we could use, not just to bless ourselves, but to bless ourselves through also being a blessing to others. Let us continue to do this in this way. And we promise that we're going to give you all the praise. In Jesus' name, amen, amen, amen.
Amen. Let the church say amen.
Amen.
Thank you all. Thank you, everyone. Hey, have a wonderful, wonderful weekend. Go Hurricanes, right?
Ooh, was that something?
All right, man, that's something, ain't it? All right, James, we'll talk later, brother.
Much love.
We got to go to a funeral. Talk to you. Peace.
Thanks, T.
Thank you, Mr. Thomas.
All right. Oh, man, if I can click this thing off. I'm trying to click it off. Oh, man. You tried.